Hey guys, it's Sean at eMiniSchool. It's July 7th. We'll go over a couple charts. For those on the email list, we sent out an email Monday night basically saying that we were looking for a short squeeze up. So yesterday we basically gapped up and then it ran all the way back down. Okay, it actually broke Friday's low. That did not change the outlook that we were looking for a move to the upside, a pretty hard move, saying just, looking at the bigger time frame, when it starts getting this low, we want to look for basing action. But this is the time where, most people are going to try to short this because it looks like the trend is down, but it's really coming to an end or a completion. Not saying it can't go up and then roll back over and break this low, but during this time we want to know that this is a high odd reversal area, just like the 605 level was. Okay, so basically when the bigger time frame bases out at bigger targets, you'll notice there's 4 or 5 bars right here. So for 4 or 5 hours, it could be one day, it could be 2 or 3 days, or it could be 4 or 5 hours. But at major levels, when the bigger time frame is basing, we want to know that because it gives us less opportunity to day trade the smaller time frames. So for those of you who've watched the webinar, that's where we say don't get into every trade like it's going to be a home run, because it's not. Okay, so if the 60-minute is in an impulse move, that's where the money is made, where the 3-minute and 10-minute really give you those home run type trades. But you have to wait for the pattern on the 60-minute to tell you that. Okay, so let's look at the 3-minute Russell for today. So our outlook was up since last Friday. So we're kind of just waiting for a long signal. Okay, so today we got a really nice long signal. So we have an impulse up, we're looking for correction pattern, and then we're going to go along the second set of greens. Okay, basically the green bar after the correction pattern. So this green bar is not a signal because this move down is not a correction pattern. We need some type of a correction pattern or for it to get into the kill zone and then go green. So even though these bars are blue, you can see the indicator is green. Okay, the blue is being printed on top of it to give us a visual heads up that a big move is coming. Okay, just like when the blue bar is the indicator is high, it means the big move is ending. Okay, so let's say you get filled at the top at 596. Okay, so it runs up, we're not stopped, and then the blue bars come in. Okay, so that's where we would start trailing the stop and we would get stopped right here. Okay, so people that have had our course for a long time, they might give it a little bit more room here because, we are above our moving average, and this is only a 3-minute. But what we want to do with the blue bars is obey it every single time the same way. Okay, so we're never saying, well, this time we're going to override it and this time we're going to obey it. It's always we're just going to obey it. Can the price go up more? It can. Okay, especially if it's a 3-minute chart. Now, if this is a 10-minute chart, it's different, but we would be stopped right here. Okay, so we would miss these 3 points. Okay, but the trade was from here long to here exit on a reason to exit. So we're not just looking at the chart saying here's the entry and we get out right here, because that's impossible. Okay, we don't want to just show max potential when we have a signal to exit. So we obey the signal. So basically the trade was 596 to 606. Okay, so it was a pretty substantial move even for 1 or 2 contracts. And this goes back to, we really want to trade the good setups. But once we're in the setup and we're in the trade, we have to obey the rules and hold it so it's worth our while to be waiting for it. We don't want to just constantly try to pick every single little move. Okay, once we're in, then we're looking for a reason to get out, and we have 3 ways to get out. So we're in control. Okay, so blue bars, big move is starting. Blue bars came in again, big move is starting, and we had a big move. What was that, about 14-point move to the top. To here was about 10 points. So, trading a 2 lot, that is a good day. You can make more on good signals than trying to overtrade the choppy days. When the 60-minute is basing, less opportunity on the day trading. It's knowing that going in so you're not overtrading in hopes that we break out. It's a different mindset. So I wanted to show the 3-minute signal. Also, on days like, let's bring in this chart real quick. On days like today where this is the NQ, so it gaps up and it just runs. And this is where having an outlook is important, which our outlook was up off that low from last Friday. But if you can't find a spot to get in on the minute charts, that's why we want to break it down to a different view, okay? And you can use a 6-range chart for that. The NQs are really good to trade even though the point value is less. The range is bigger on the NQs. So the ES is frustrating to trade because there's so many people trading it. Okay, so the NQs trade more like a stock. It really moves. It's kind of like trading Apple or Google. It's like a $1,750 stock. It has a big range and it really moves. Okay, so you can see some of these moves were like 20 points. Okay, so we had blue bars here saying big move starting. Same thing here, same thing here. Direction was up on all time frames. Okay, so we only want to go long. We are not going to short anywhere in this day. That would be going against our outlook and going against the charts in real time. Okay, so there's some aggressive entries on the range chart. You can play the breakout of the prior high. Okay, knowing that it's probably going to come back and test this high, which like right here, it comes back, tries to test, breaks this high, tries to come back and test. So there is testing, but there's more retesting on the ES. Okay, meaning if you're trading the Russell or the NQs on range charts, you'll get more of an extension off the entry. On the ES, it'll extend and it'll come right back down and test it because it's so thick. So it's harder to trade. It's harder to hold the trade because there's so much back and forth. Okay, so and also just real quick, we'll bring in the ES on the scalper. There were some scalper trades in the direction of our outlook. So we had scalper trade here, scalper trade here, and when we're talking about scalping, we're going for +2, +4 points per trade. But we're always using the targets based off of our 3 and 10 minute. Okay, so we get the direction from those and then we use this as an entry. That's all we're using it for, really, is because if you miss the perfect entry on the 3 minute or you weren't right at your computer at the perfect second, you can then break it down and wait for another opportunity to enter the trade. Okay, there was a scalper here, actually it was right here for the entry. So there was a lot of scalpers in the trend direction. And that's what we really want to stick with, is the trend direction. Now, real quick, I have to wrap up the video, but our outlook is basically up into this zone, okay? The retracement off the last move. Knowing that this was a pretty big move, we're not going to go just straight up. So our outlook was up, it did go up, but now we're getting into a level where we're getting a little bit extended, which we could still extend that in the morning, but we wouldn't be super aggressive the first 30